And good evening. This is the Elliott wave update for the S&P 500 for Wednesday, June 29th, 2022. Here on the daily chart, the first thing you may notice is that I have relabeled, and it doesn't really change anything other than it just puts it back into what I continue to use as my preferred count. In other words, that it is an ABC coming down and that the C wave is going to be in my view, could be very devastating, could be very destructive on the way down if this count remains accurate in terms of minor wave one being complete, minor wave one of intermediate wave C being complete at that 36.39 low. So let's kind of dive in and see where we are. Again, daily chart, no real changes other than just reverting that labeling back to reflect the A, B, and then the C. And we'll go from there. And within this C wave, it still does appear that this is just minor wave one, and that this is a corrective move higher. And that still also continues. If you can see, I got an ABC and I've got nothing above it. And what would go above it would be either minor wave two, or it is a minute A wave. This is going to be minute B wave, and we still have that C wave up, which would project to get us back above 4,000. If that's the case, we do have that resistance at 4,013 to 19. Then we have 41.36 and possibly as high as 42.54. Now, I'm not looking for that, but that is still out there. So I'm leaving the retracements up for reference points only at this juncture. I am not saying that this is what is going to happen. Market still needs to prove intent. And I believe we'll be getting that pretty much cleared up very shortly. So here we are, ABC. We're still within minor two. We're going to 1, 2, 3, 4, equal. This could be a little bounce back up. Finish could be a 4. We're going to slide down as a 5. Maybe it gets down to the 200 SMA moving average here at 37.96. So do a quick dip below 3,800, complete that, and then rally, and that would do 1, 2, 3, 4, 5. Then we would rally in another ABC to put in, because this could be wave one of minor wave 3. And then we'd be looking for a minor wave 2, a minute wave 2 of minor wave 3. Outside of that, if indeed it's going to turn into like possibly an A, B, and a C, and we're just looking to finish a C wave here, and I can label that as wave B, then we have the other count, which would show that we're going to head higher and end up above 4,000 as the market finishes that minor wave 2. Yet to be determined, and the only ones that can do it are the markets themselves. So we're still looking for that type of a direction. Now for tomorrow, we reserve all the upside for the market to determine. But as you can tell on the hourly chart, look at that 200, flat as a pancake all day, and literally held all upside attempts all day. So this may just actually rally up, give it another old test, and then fail, which would then turn this into possible 5 waves down instead of ABC, but we get 5 waves down, and then we get a wave 2. So market, I think, is going to be able to tell us pretty quickly here what is up and what the intent is moving forward into expiration, and then after the 4th of July holiday, what we can expect from the market. So again, upside. Right now, we could get a quick little bounce back up to give a test to that 200 EMA, 200 period in EMA, moving average, and then put in another little fall lower, a 5th wave down. That would take us below the 200 SMA, which is at 37.96. Again, we should find some support underneath all that as low as 37.84. And I would imagine those levels should be able to hold and contain a small fifth wave. If the fifth wave begins to extend, then we have 37.45, 37.37, 37.35, and we're coming all the way down to 36.93, which should match up with another level over in the NASDAQ at 11,320. Those two may match up. It is a support zone for both. It is a level that the market has a full capability of getting to and start to really sway this whole pattern to put the minor wave 2 up here. Now, for that to occur, like I just said, the market needs to break down. It needs to sail pretty much like this. Give us another one of those. We'll likely end up back here. And then again, set ourselves up for another day of rally or just a bounce. So upside, we have the story. We have resistance. Resistance above 38.30 comes in, actually, excuse me, 38.35 comes in at 38.46. And a break above that just takes us up to 38.73. Again, the market can power higher, and it may be surrounding expiration, which is on Friday. It's also an expiration for before a long weekend. So hard to say what traders, firms are all going to want to do before the holiday weekend. So either way, I'm expecting some covering, some adjusting, some just getting ready to take the 3 days off. So we have our upside, we have our downside. Continue to follow the moving averages. They are very helpful. They do, even when they're positioned flat, give us a lot of information, particularly today. That was the cap. That was the cap on the whole day. Never got above it, except early. Right there at the open, got above it, failed. Tried to test it, failed. So here we are. The moving averages are very helpful. If we could continue to decline, we got the 20 below the 200 EMA today, and that brought in some additional sellers. If the selling continues and the 50 then goes and goes below this 200 EMA, that's going to add some additional pressure on the market. My thought would be if it gets there, this is likely going to be here. So we'll see. We have our points below where the market can get to. And I'm just going to wish everybody a really great trading day tomorrow. Hopefully we'll be a little bit more active than it was today. And everybody gets a chance to make some solid gains. Our next update will be on Thursday, June 30th.